Perfect. My camera isn't. Oh shoot. Okay, that's fine. This is gonna be a really quick recap. I'm just gonna go over Monday and what I'm expecting for tomorrow. So right here we have 9:30 open, New York open. I wasn't really here, which that's a good thing, I guess, because look at this. This price section is really horrible. This is abominable. You do not want to be trading this. You could have expected or anticipated this power 3 off the open. I would have wanted to be looking for the Judas swing like this falls from lower, but as you can see, this is pure accumulation. But running through this, we accumulate down here some more, and that's where we start distributing up higher, which puts in this high of day, which we just ran out right now when I was watching the charts. 350 macro, we seek out buy side, this untouched buy side liquidity. But as I was expecting for today, Monday, I was saying we were going to be more of an accumulation range because that's typical for what we do for Mondays, and look what we did. Stayed inside of this range for most of it. This low and 4th standard deviation lines up perfectly. We didn't really get a trade until we entered the PM session, and right here you could see, or you could call this the 130 Judas swing, where we had this false run up higher right here, but I used standard deviation from this high down to this prominent low right here. Not this down close candle right here, but this prominent low. And this is the lower short. This is the best place you could take a trade off of. We didn't really have any type of higher time frame PD area that I would have been wanting to look for. We could also throw volume profile and see if we had anything on it, but we didn't really have much. This is just an anticipated area. So not really a higher time frame PD area. Unless we scale up, we might find one. So let's look at the higher time frame, see if we have any type of higher time frame PD area that could have helped us anticipate this trade. And I mean, first thing that we can see is just an order block, but that's not really anything that's too convincing. Usually if mean threshold is not, or usually when mean threshold is respected, that's where we can anticipate a move lower, but by that time we've already formed this and respected it with the close and the open. We probably already ran lower, so you probably will have missed the lower short. But right here, this is the absolute best place. We close below it, we retrace into it. Sometimes now I enter off the 25th quadrant of inversions, so it would be like right here if I took an entry, and my stop would more than likely just be above this order block. But second place, once we shift market structure, this is a mitigation block right here, and this is perfect. If you want to take a short, we run lower, we could draw out OTE. I don't think we retraced it. Actually, we probably did, honestly. At least a discount, or at least a premium. So the big reveal, 705 almost perfectly. We're inside of OTE. I'm not too sure if we tapped into 705. We are very close to tapping into it, but we didn't. So that's fine. We were still inside of OTE. Perfect place to be taking a trade. So mitigation block with a fair value gap, which makes this a high probability. Especially inside of OTE, this is a high probability mitigation block, mainly because this leg right here, OTE, fair value gap, mitigation block. All of this right here, this would be a perfect short. And with how small the risk is, you wouldn't really have to worry about moving stop loss to threshold and stop loss to break even. Jeez. The best place for you to put your stop loss, a lot of people go against this. I still stand with it. Mean threshold of the order block. I always do this still. But with this fair value gap, 5 handle stop loss with your stop right above this inversion, that's perfect. We formed equal highs up here, which, I mean, we already ran that out. And with our standard deviation, we could have targeted our second standard deviation, which, as you can see, we respected it pretty well. It's small 35 handles, but 35 handles is good, especially with how high probability this trade was, especially in bad conditions, so I probably would have taken it on micros. But, as you can see, the bodies respected it. We formed equal lows again for us to take out, for us to seek out in the future. And overall, since we didn't close below and the bodies were respecting the second standard deviation, we started running up higher. We retraced into it one more time, and we pushed up higher. And 350 macro, we ran out, took out untouched buy side. Do you have any questions right now?
Hierarchy. Oh, I didn't see that.
That was a quick recap. What I'm expecting for tomorrow, I typically want to see some sort of manipulation that will push us lower, like something to take out equal lows, this low right here, eventually throughout the future, just chop all the way down here, run up this low, because I still want to see, I think you guys know my objective, where I want to see you ran out. These lows right down here. So it's closer to the 5th standard deviation, but still, I really want this low to get ran out. But yeah, that's all I'm expecting. Do you have any questions? I didn't take a trade today, by the way. No.